a commodity which is a cash cow for HMRC. Once you get into a UK property, I'm not saying you should not get, hopefully by the end of this particular discussion, we should not end up selling all the properties, but we need to have more savvy tax planning around the property. You buy a property and pay tax, and that's only the case with the property. Anything else, you don't pay tax, because you should not pay tax. You have not enriched yourself. You've actually contributed to the economy, but here, you're paying tax. And last one. If I started buying pen, selling pen, £2 and selling it for £5, and now I've converted this into a multi-million pound business. Say my business is worth 2 million, and I died with 2 million worth of stock as pens. Would I pay inheritance tax on it? Would my children pay inheritance tax on that 2 million pound? The answer is no. Why? Because there's something called BPR, Business Property Relief, that is applicable to every businesses other than a business which consists of bricks and mortar, and that is property. So replace that with the pen, with the property. I kept on buying and selling, and now I've got 10 properties, 200,000 each, worth 2 million in total. Now if I were to die, would I pay inheritance tax? Yes. How much? 40 sweet percent. So imagine, do the maths. 2 million times 40% is a huge chunk. It's not a small figure. But that's applicable only in the property, not in any other trade. Prove me otherwise, I would love to. So that's the fundamental difference between the property and any other asset or any other business that you would have. At the inception, you've been taxed, and at the exit as well, you've been taxed. In addition, what you've been there in between income tax and capital gains tax, even there's a clear bias to collect more revenue from the property sector as opposed to any other sector, whether I were to be in retail, wholesale, fashion, manufacturing. I could be paying lower tax compared to if I were to be in the property business. How? I will explain you, and I will prove you with the evidence of the legislation in the last 5 years. Can I have the next slide, please? So I'll start with the example first. So if I were to be in a property flip business, which I normally give, that I bought a property worth £100,000, did some refurbishment. Now the market value is £200,000. Hey, I've made a profit of 50K. Have I? Really? No, because I would have paid at least stamp duty land tax of £3,000. And if I were to sell the property, I would have paid 14,000 capital gains tax. So in essence, if I were to sell the property, I would pay almost 1/3 of my gain. That's a huge chunk of my hard-earned money. 1/3 has gone to HMRC. What the worst would be, if I were to not sell it and keep it, it would be subject to 40% inheritance tax. That means 2/5, even worse. But again, if I were to plan it, you should be able to mitigate that. Next slide, please. As I've mentioned, we have discussed what part, which is what are the property taxes. We have bifurcated into 4 stages. And these are the minimum at 4 instances that you would be paying taxes on. Now our aim, which is topic number 2, why we need to do the property tax planning. And I would give you with the evidence which affects tax legislation in the last 6 years as to why there is a clear bias to collect more revenue from the property sector as opposed to any other sector. Now, the legislation came in 1st of April 2016, which is a stamp duty land tax surcharge, basically, in essence. That means whatever stamp duty land tax, remember, when I'm buying pen, I'm paying tax. I was paying tax anyway. It was not sufficient for HMRC. Now they're saying pay more. That's what, in essence, it is. And that came from 1st of April 2016. I would say give or take 7 years. So I'm paying more to buy a property compared to what I would have paid 7 years ago. And again, forget the fact that I'm a tax specialist, just go as with the common sense, and that's what I'm trying to go with as well. So what am I paying? Up to £125,000 property, I'm paying 3,750 additional tax. This is additional, by the way, yeah? It's not total, it's additional. On top of what I would have paid before 2016, I'll be paying this more. And so on for the property values, £250,000, and so on and so forth. So as the property value goes up, my stamp duty land tax goes up as well. And these are the additional part. This is not the total stamp duty land tax part. Legislation came in March 2019, 3 years ago, 4 years ago, which says now I have to pay STLT within 14 days. Previously it used to be 30 days. As if HMRC could not wait for 16 more days for me to pay the tax. It's that easy to collect revenue from property. And that's what I'm trying to showcase with the legislation in the last 6 years. That's that. Is that the end of it? No. With every tax system I would discuss, and I would give you some hint as well for you to take home. but please don't do any DIY tax planning. Said, how many of us have heard that if you were to buy a probate property, you know probate? If I were to die and I leave a property, that property kind of goes in probate. How many of us knew that if I were to buy a probate property, I would pay 0 stamp duty land tax? And I mean 0. Yeah? Yes. And likewise, there are about 37 other legislation. Devil is always there in the detail, but the fact is if we know them, we can implement them. And imagine if I were to buy a probate property worth £925,000, how much stamp duty land tax I'll be saving? Do the max. At least £100,000, £150,000. And these are all by the legislation, by the books. But the fact is, we need to be aware of it. Next slide, please. So we have covered the first, stamp duty. Yes, go on.
Already put somebody to inherit your property, would you have to pay the tax if it isn't the way you've got that he is your beneficiary? Would you have to pay tax?
So it depends on what you have left. So if you have left 10 million, that's too much. So you would have to pay tax. But if you have left only £325,000, that's okay. You don't have to pay tax. But again, the answer doesn't finish there. And as always, I suppose UK taxation arguably is one of the most complicated. It is there for a reason, so that we can pay more tax. You could eventually give up to 1 million without paying inheritance tax as well. But I'll discuss that part. I'll come to inheritance tax. Yeah. Up to 1 million, you don't pay. However, subjective. All the answers are subject to. There is no 1 plus 2 equal to 3 in taxation as long as one particular person is concerned. My advice to you could be different to my advice to somebody else, because your circumstances were different to someone else. But I'll come to that briefly on inheritance tax side. Capital gains tax. What we are trying to prove? We are trying to prove that why, if I were to have a property, I have to do a bit more tax planning compared to any other business. Legislation came in 6th of April 2017. What does it say? Go back to the pen. Bought this for £200,000. Turned out to be an antique, and now I'm selling it for £1 million. I made a gain, right? What capital gains tax I would pay? 10%. Replace this with the property. Bought this for £200,000, turned out to be £1 million, but now it's a residential property. What capital gains tax I would pay? 18%. And again, 20 or 20%. Why am I paying more? Because it's a property. Do I have any bargaining power? No. You just pay tax. So you pay more by just having a property as compared to not having a property, as compared to replacing the property with any other asset. And this came since 6th of April 2017. So prior to that, everything was equal. Everything was par. Next slide, please. So remember I've mentioned about section 24, which is the mortgage cost we can no longer deduct. So that's what the legislation was. It says that from 1718, they would give you reduced rate of mortgage cost that we can deduct from our rental income to effectively up to 2021, you can now no longer deduct. And by example, coming to the next slide, I will showcase as to how complex the tax legislation could be. So we go back to our example of my earning £2,000 rental income, £500 mortgage cost. My profit is now 1,500. But HMRC says, no, you can't deduct 500. So my profit is back to £2,000 again. So that means I'm paying more tax because my profit has gone up and my mortgage cost has also gone up. And as a result, many people have done some tax planning which may not be applicable. And I'll come back to the answer that I gave you earlier, is that a tax planning advisory service cannot be one fit for all. My answer to you could be different to my answer to him or somebody else. Why? And I would prove that. So although legislation says you cannot deduct the mortgage cost, I will prove you with the example that you can deduct the mortgage cost subject to what your income is. Can I have the next slide, please? So what I meant by this is this. So what I'm saying is, if my total income remains up to £50,000, the mortgage cost that I could not deduct doesn't affect me. That means I can still deduct the mortgage cost, in spite of the fact that HMRC says I cannot deduct the mortgage cost. So give or take, put the 50K circa in your bracket. And then, can I have the next slide, please? So that's my example. On one side, what we have done is somebody who's earning £50,000. On the other, we have got somebody who's earning more than £50,000. To be consistent with the figures, we have just doubled the figures of all the on the left side. So if I'm earning rental income of 40, I would say I'm earning a rental income of 80. If my mortgage cost is 10, my mortgage cost would be 20, to be consistent with the figures. Now, when you see before net profit, there was £30,000. Why? Because I could deduct the mortgage cost. But now I can no longer deduct the mortgage cost. Hence, they would not allow me, hence my profit is 50. However, with the taxation, devil is always there in the detail. Although they would not let me deduct the mortgage cost, they would give me a relief at the basic rate band, which you can see on the second last line. And hence, as I have mentioned and with the evidence, as long as your income is up to 50K, this legislation of the mortgage cost you can no longer deduct doesn't affect you. With the example, yes, once your income goes more than 50K per annum, it would start pinching you quite heavily from 11,472 to 15,472. But up to 50K, you're fine. Next slide, please. So we have covered 3 stages so far: stamp duty, capital gains tax, and income tax. Now, last but not the least, is kind of a topic of this particular presentation, which I've converted into property tax, is the inheritance tax. Now, there's something called retail price index, inflation. Are we aware of it? What is inflation? What is the retail price index? What exactly it is? What is inflation? Yeah, consumer price index. What is it? So I mean, if the price of potato is a pound in 2021, it should be 1.2 or 1.1, if not £2 in 2023. In essence, what I was earning back in 2008 to what I'm earning in now 2023 should be higher to match up to the inflation rate, to match up with the CPI. The same goes with the foundations and the legislation affecting the income tax and all other rates as well. So back in 2009-10, the income tax threshold was 6,475. That means up to £6,500 that I've earned, I would pay no tax. Anything more, I would start earning, because comparatively 6.5 back in to 12,500 now is almost having the same value in terms of my buying capacity. Are you with me here? Yeah. So in the current year, I would pay tax once my income goes more than 12,570. But back in 2019, it was just 6.5 because the value was much more higher of my income. Hence goes with other thresholds of national insurance, class 2, class 4, and look at the inheritance tax. What was the threshold back in 2009-10? £325,000. What is the threshold now? £325,000. 0% increase. What are the tax rates? Look at the others: 20%, 13.8%, 9%. What is this one? 40%. It's like a diabetes. You have it, you don't realize it. So again, going back to the example of taxation and collecting revenues, currently, the most revenue, which is most money that HMRC gets from us, which source, if I were to say, which particular source, currently it's PAYE, as in pay as you earn scheme. So that, for example, if you were to hire me for £25,000 salary, and God bless if you were to do that, any tax on national insurance that I would pay, and you would deduct on my behalf, I have no say on it. So you say, okay, £2,000 is your monthly income, tax and NI deducted, this is your £1,731 net pay, you would put in my bank account. I can't say anything. That PAYE is the first income source generation for HMRC as of now. By 2025, it would be superseded by inheritance tax. Why? Because when I am dead, I have no say on what goes in taxation after my death. Something similar to the PAYE as well. On the contrary, my beneficiary would be interested in what they are getting as a net as opposed to what has been paid in taxes. So while I'm alive, if you try to take something out from me, and I will do everything I can, which is income tax or capital gains tax, I will try and do some savings here, savings there. So if I've got this, and if you try to get even one page of this, I would do everything in my power to stop you. But after my death, you could sweetly take as many pages as you want, as long as it's there in the legislation. And that's what it is happening. And it's quite lethal. How? I'll show you with the live examples. Can I have the next slide, please?
Inflation goes up and down. For example, today it said inflation has gone down to 8.5%.
So overall, inflation and the CPI has gone up. It would keep on going up. I mean, as of now, we are living in the most highly inflated country in the entire European Union up until April. And I think it continues for this year, this month as well. But overall, the inflation rate keeps on going up. I'm not talking about the minor fluctuations in a month's time. I'm talking about in a large, grand capacity overall in year on time. So what we have done here is just taken few humble properties in London, Zone 1, Zone 4, and we haven't gone anywhere near South Kensington or Chelsea or Mayfair to compare the values. And these are the live values. You can search on Zoopla or Rightmove to see what the properties are. Property addresses are there. What the property value was back in 2009, 730. What is the value now? 1.4. What is the increment in value? And what is the inheritance tax you would pay? This is what you would pay. Period. Unless you do something about it. 40% would go. So by freezing the threshold, HMRC is collecting £250,000 more on property number 1 and £120,000 more on property number 2.
Sorry, this only applies to people who've got rented properties, yeah? Like myself, I don't have any property apart from what I own. If I downsize it, would I have, obviously I bought the house in the 1980s, the price is more now. Would I have to pay any tax?
So this is inheritance tax. It applies when you die.
Oh, nothing. If I move downsize, it would apply.
Yeah. So again, when you say downsize it,
it would, because it's inheritance. The moment you die, you're liable for tax.
Well, no, I'm still alive, but I'm downsizing.
don't make him dead. He's still alive. So in essence, okay, just to give you, again, to answer the question, as of now, this is your property. Maybe you bought this property for £20,000 in 1980. Now the property is worth £1 million. Okay, example. You say, oh no, if it's £1 million, I'm going to pay inheritance tax on it. I don't want to pay. So what I would do is I would downsize it, as you say. So that means I'm going to, I don't know, maybe sell this property now, buy a property worth £300,000. So that means when I die, I have only £300,000. Just be there. So this has been downsized to half of this. But you've sold the property, right?
Yes.
Where's the £700,000? Yeah. So in essence, it's not about just the property. It's about what you have. Okay. Property, cash, black money, yellow money, anything that you have, it all gets accumulated. And then eventually on it, you would pay 40% inheritance tax. The reason I have given the example of property is because by default, if the person were to die, the bulk of that particular estate would be normally property, as in 70-80%. They would have a business, they would have some fans, stocks and shares, some money in the bank account. However, inevitably they would have properties, and that would form normally more than 50-60% of the total estate of the property. But just to answer your question, yes, that's fine, that's okay, provided £700,000 you give away in your life and live 7 years from that particular time, then it's outside your scope of inheritance tax. But if you live with £700,000 in your bank account, unfortunately the entire sum would be subject to inheritance tax.
Isn't it £1 million now before you start paying inheritance tax?
Yes and no. So again, I have given the same answer to that particular person. So yes, it is 1 million, provided the property value is worth 1 million. And provided you are married. And provided properties are owned by husband and wife. And provided property will go to children. And 4 more conditions, which I have not mentioned. It's always in the detail. But as long as you tick those boxes and get the details done, you're fine. But only up to 1 million. And this, not only the fact that £325,000. So again, we go back to 2008, 9, and now it's 2025. This will remain up until 2025. It's 2023. And you can imagine the increment, and you can imagine the harsh tax collection revenue that HMRC could collect. Next slide, please. Of course. As I've mentioned, the 4 stages. Once you enter into a UK property arena, you start paying taxes at those 4 stages. Either you buy a property, you get into the property ladder, you pay tax. You earn a property rental income, you pay tax. You sell it, you pay tax. And you keep it, you pay tax. Okay? 4 areas. Of course, there are other areas as well where you pay tax, but just look at holistically 4 parts. And now we've talked enough of the bad news. Let's look at some good news as to what we can do to mitigate the taxes. I hope that by the end of this particular discussion, people would end up not selling but buying more, which I would like to encourage. But as I've mentioned, there is no one-size-fits-all. It's not, you're not buying potatoes or tomatoes, which would be similar in quality and product. It's a tax advisory which is subjective to your own circumstances. And I'll just discuss as to what we can do to mitigate some of those taxes. Can I have the next slide, please? So don't get bombarded. I'll try and touch one by one to make it understandable as to what we can do. The very first one is the portfolio incorporation. Now this only applies to anybody who's got 5 or more properties. What I meant by that is if you have 5 or more properties, whether residential or commercial, you can transfer them into a limited liability company, and with that it comes a lot of tax savings. But only for 5 or more properties. What kind of tax savings? Just by an example, if I were to tell you, say I have bought 5 properties worth £100,000 each back in 2000. Now, total value back then was £500,000. Now the total value is £2 million. If I were to put them into a company, the revised market will be the current base value. That means the value now £200,000 would be the new base value for the company, and if I were to sell it, I would pay 0 capital gains tax. But that's again, this is something only applicable for those who own 5 or more properties. Freeze the share of smart company structure. You have a property. I would recommend see if you can put that particular property in a company name. And then what that company does is it freezes the value on the date that you've put that particular property in a company. What I meant by that is, say I bought one buy-to-let property in a company worth £500,000. No mortgage on it, example. By the time I died, it was worth 1.2 million. Going back to his question, if I were to die, I would pay inheritance tax of 40% on 1.2 million, right? But if I were to buy under a company which is smarter, as in it has got freezer shares, it freezes the value on the date of my purchase. That means there is no rosy promises. Yes, I would pay inheritance tax, but only on £500,000. Not on any increment the property has seen from £500,000 to 1.2 million. That's a huge saving of £700,000 times 40% inheritance tax. Then comes, are we still there? I will go for the UK trust, and I think this is more applicable to people here. What we have also seen is that when we do the property tax plannings and property income computation, majority of the time they would have a family members within husband or housewife, children who are not working, who could be working. And by just utilizing the personal allowance for higher rate taxpayer could save as much as 40%. What is the minimum legal age to work in this country? Somebody said 9? No, that will be illegal. It's 13, 1-3. So if I have 2 kids who are 13 years of age, they could legitimately, legally work in my business, whether it's property or any other business. I could utilize the personal allowance of £12,500, multiply that by 2, £25,000, and multiply that by at least 20% income tax savings, which is £5,000. and that's tax savings year on year on year, ongoing. I think I'll go back to the trust taxation slide. So if I can go for the next slide, and the next slide, please. Next one, please. Thanks. So here, okay, what I have not covered earlier is tax planning as in what we can do to mitigate tax. However, there are certain things that we can do to claim the tax back as well. As I have mentioned, if I have bought the property and I have paid a stamp duty land tax, we could claim the entire tax back. You should be able to claim that entire tax back from HMRC. So there are stamp duty land tax you can claim on. If you bought a commercial property, you can get a huge amount of capital allowance back on it as well. But here we'll just concentrate on the trust side if we can. Trust can be only of two types, which is either interest in possession or discretionary trust. What you might have heard of other characteristics of the trust, such as doctor, lawyer, engineer. But like human being, there can be only of two, barring the exceptions, male or female. Similarly, trust can be only of two, IIP or discretionary trust. Now, beauty of having the property into trust is the fact that any tax paid by the trust can be claimed by the beneficiary full. And this could be a game changer for many of us who are doing their property income tax planning or property income tax returns. What I meant by this is, I have one property, is earning a rental income of £20,000 and I'm paying tax on it. Simple. If I were to put that property into trust, now I would not pay tax, trust would pay tax, right? But smartly, if I give, after paying tax, dividend to beneficiaries of the trust who have got no other UK income, then I can claim the entire tax back. Sounds too good to be true? It is true. Because the legislation around the dividend on the trust is different compared to legislation around the dividend from any other entity. So as of now, if I have a company and if I take a dividend from the company, I would pay tax on top of the corporation tax because I've took the dividend. But if I take the dividend from the trust, the beneficiary will get the tax suffered by the trust into their bank account. So in effect, you have paid zero taxation on that particular property that you have transferred. Can I go for the next slide, please? I think I have done enough of your mental exercise after the physical exercise, and I'm ready to take any questions if you have any. Thanks.
If the taxes are so high, sorry.
Some people can't hear you.
You say that I would advise people to buy and sell the property, but even when you buy the properties, you see, they're especially properties which are quite, the threshold is over £1 million, even less than that, still there's so much tax to be paid. Then if this is not the best form of investment, now that all these taxes are sort of come in your mind, what is then the best form of investment apart from property?
Well, properties have been the gold mine in terms of as long as the investment is concerned, especially amongst the Asian communities, but growingly amongst other wealthier communities as well, treated as kind of buying a diamond and keeping it safe somewhere. Given the fact that the value of diamond could not grow up as much as the value of property could go up with the inflation rates. And that's what I'm trying to depict, the fact that with the legislation affecting in the last 5 to 6 years, it used to be, and it still is, but you need to make sure at what particular stages you will be paying more taxes on and do something about it, because by not doing anything would not resolve the problem. And it wasn't that heavily affecting taxing side as long as property is concerned before. It's just now HMRC is thinking, if you have a property, it's a no-brainer. It will go up value in property. You would have rental income. It's a cash cow. So if you're having, why can't I have a bit more, a bite from your pie? And that's what it is, in essence.
Has this become a law already? I asked you.
Everything that I've discussed is legislation. And it's not legislation now, it is legislation in the past 5 to 6 or 7 years that has gone live since. So yeah.
If somebody dies and he somebody dies and leaves a property over £1 million to his beneficiary, do you suggest he should have a trust? And how does he start the trust?
After death, the game is over. So whatever you want to do, majority of the time the game is over. It's not all ended. But what I have discussed here is while the person is alive. So you could have a trust while the person is alive, not post-death. So in essence, what trust is, by giving it away. So if I were to have this and this, 500,000 and 1 million, so 1.5 million. And if I die, this 1.5 million will be subject to inheritance tax at 40%. Now only way by not paying 40% of inheritance tax is by giving 1 or 2 or even both. I could give this away. So it's not part of my estate. And live 7 years from that date. That is the only way.
Live 7 years.
There is no other way. So now I have to give it away. But if I were to give it away to him, and he would say, thank you very much, Arif bhai, the door is there, get lost. I wanted to benefit him, but it turned out to be at my own detriment. I like him, I love him, but I don't trust him. That's where trust came in place. So I have put this into trust. I say, you be trustee, I be trustee. You will remain the beneficiary, but what you will get, how you will get, when you will get, we decide that. That's why it's called smart gifting. In essence, it is just a gift. You are giving it away. Period.
And how do you establish the trust?
So again, so you could have the trust in the lifetime, because if you have a trust on death, going back to example again, when you died, what is your estate? This is your estate. It doesn't matter if you have trust now. You're still going to be subject to 40% tax. For you to have savings on 40% inheritance tax is by you giving it away while you are alive. And more importantly, live 7 years from that date. And pray to God that you live 7 years from that date. But again, the more the years that you live, the better it is. So it's not the fact that if you died on 6 years and 364th day, oh my God, 40% tax will be there. No. HMRC is more lenient. So as long as you live more than 3 years, the tax gets reduced. Again, there are legislation associated with it, but in essence this is what it is. Keep this in mind. You are giving it away, but I'm not giving it away outrightly, because tomorrow he got married, I don't like him anymore, or whatever. I can move him out. I can say, okay, now you're no longer beneficiary, you are beneficiary, we remain the trustee. I can do whatever I want to do. So I have given it away for sure, but who, what, when, where, that can be changed. If I were to give it him outrightly, from the very first day he got a pen, that is it. It's up to him now. He decides whatever, whenever, however he wishes to do. And I don't like him. That's why.
Yeah, Arif, તમે એટલું સિમ્પલ કહો છો કે બસ ટ્રસ્ટમાં નાખી દો. Is it as simple as that? You form the trust, okay? And you put your house in there so that it's no longer under your power. Isn't it that when
it is under your power, by the way,
yeah,
if you put into trust.
Power,
if you don't put in trust, it's not
I am
under your power.
Yeah. So at that stage, when it comes out of my name and goes into the trust, do you pay tax on that stage?
So we ensure that when you transfer any property into trust, there is no tax involved. That is the critical part, unless you could do the DIY tax planning as well. So when I give it to him, this particular property or pen or asset, even when I transfer, it triggers taxes. And same applies when I transfer property into trust as well. However, there are legislation which can allow me to claim the exemptions. So I don't pay any tax, and that comes in writing, that you would not pay any tax when you transfer property into trust. You just need to pray to God that you live 7 years.
Excuse me, at the moment I'm living in a property which 50% belongs to me and my wife and 50% to my son and his wife. If I give away my 50% to my son, I believe I can give it, isn't it?
Now are you asking me the question or are you answering the
And
question?
I'm asking you a question, can I give it?
You can or you can't. Okay. Say I have given this pen to him. It's his now. Then next day I call him. Kim Cho, can I have your pen? Khali 2 minute માટે. So I used it. Okay, I'll take it back. Again I call him. લઈ લો પેન વાપરું થોડી. I do this every day. તમે શું કહેશો? તમે શું મને શું કહેશો? આપી શું કામ છે મને? તમે જ લઈ લ્યો. But would you classify this as a gift? No. So what you're saying is, you want to give something while you live in the property. It's called GWRB, in a easier way, gift with reservation of benefits. That means I have gifted it, but I'm reserving the benefits associated with it by keep asking him to giving me the pen back, and I could use it. That's what you're doing. You want to give the property away, but at the same time you are living in the property, benefiting from the property. That is not a gift.
That's not agree.
So for you to actually give, you need to stop taking any benefits associated from that gift. Only then it's a gift, no? Forget taxation, apply common sense. So if I were to give this as a gift, it becomes his when he wishes to do whatever he wishes to want to do with that particular pen. If I tell him that give me the pen to use it, and I do this once or twice is okay, but if I'm doing this every day, that's what you're doing. Every single day you are living in that property.
No, but it means that I was told that I have to pay rent to my son to live in that property.
So again, I get this a lot. I was told.
No, but
I would ask, if you were to take a tax advice, you do 3 check boxes, and that applies to everybody. As long as you tick those 3 boxes, you're fine. Number 1, ask the person's qualification, who the person is. Okay, so you got something wrong, you can go back to the profession body and report it. Number 2, ask for the person's profession indemnity insurance, and physically actually look at the profession indemnity insurance, so that in making sure your tax consequence is more than sufficient to cover the indemnity. So that if they go indemnity of 5 million and something went wrong and you have to pay £500,000 to HMRC, that £500,000 is more than 5 million is more than sufficient to cover your £500,000. And number 3, don't take the word of that particular person still. Whatever the advice comes has to come backed up with the section legislation. So I would say, this is what I'm saying because of section 33 of this. So you can go back and refer to the legislation. As long as you have ticked the 3 boxes, you are sufficiently covered. So if you have taken that advice from, I've been told, which I get that a lot, I've said, you go through with these 3 check boxes. If you have ticked them, then I can answer the question. Otherwise, we could be here all day long saying he said and she said. Okay? Yeah. But again, just to answer your question as well, that's correct. You would pay the rent. You would have to pay the market rent if you want to give the property away. But it's an area where HMRC are very alert.
yes, but my son cannot waive the rent.
Yeah, it's an area HMRC is very alert. You have to take the market valuation of the property every year physically. You have to have the 3 estate agents. These are the requirements who can do the valuation of the market rent of the property. You have to pay the entire rent of the property, not just your half share. You have to physically transfer the rent every month to that particular person's bank account. These are all the legislation. And that particular person have to declare that particular rental income into their tax return. So I would not go into the hassle of it, because moment I've mentioned this, HMRC would come full armed on my case. I would rather, what I do is remortgage my property, so I have the funds out, and I could give cash to my son or put it in trust. That way, that is something that I have no control on. Living in the property and gifting it away is not something HMRC really like it, purely for the example that I've showed you. Okay, so when you said you put the name of your children or anybody else for that matter, what you have in essence done is gifting, right? If this is owned by me, now I say, this is owned by me, it's worth £3 or £300,000. I say, I'm putting your name. What am I going? So now this is worth £100,000 only for me, right? Doesn't matter. Now it's worth £100,000 to them, £100,000 to them, right? It's gifting. In essence, it's gifting. That's it. It is gifting. You answer yourself your own question. Yeah, but you're living in it, right? Yeah, that's what I would say. I would not recommend. That's what I've answered just now, the question, that I would not recommend. And when you give it away as well, as I've mentioned, if I'm gifting it, it also triggers taxes. You can't just add somebody's name. Yeah, okay. No, it doesn't work that way. Because if you are giving it away, it triggers capital gains tax, I've told you. Selling. You haven't taken the consideration out of it. I get that. But it's called, again, it's very complex. It's called arm's length transaction. Tamara chokrao, your family members, your business partners, they all come under arm's length transaction. So I could be smarter. I bought this for 200. Now it is worth $500,000. If I were to sell it, I have to pay capital gains tax. I would tell him, "Tame a lei lo. Mafat ma. Mane paisa api dejo rokoda." HMRC says, no problem, don't worry. Even if you've given for free, that's fine. We would consider the market value on the date of transfer to be the deemed sale proceeds. So it's still worth $500,000 that you have sold it for, because somebody got the value of it. And now this time, I'm not going to pay tax, you will pay tax, because you got benefited from it. So I would stay away from any DIY tax planning, because of it you got nobody to blame to. Okay?
Okay, hello. Yeah.
Yeah.
મારી પાસે મને somebody want to buy for me.
Mine nathi buy karu. Go on.
Okay, some of my relative want to buy for me a property and want to send money from overseas as a gift. So will I have to pay tax on it?
So તમે શું કરો છો? You're selling property.
ના. એટલે સમજો કે હું એમ જ પ્રોપર્ટી નથી અહીંયા કાંઈ પણ. તો મારો બ્રધર કોઈ ઓવરસીઝમાં બિઝનેસમેન છે, તો you want to gift me a property. I want to send me money to buy a property. Oh, he buy for me. So did I have to pay on that gift tax?
Do you have to pay tax on that gift, which is owned by your overseas
No,
relative?
owned by me.
He's gifting you the cash.
Yeah.
So obviously he is the one who's giving it away, right? He's gifting you the cash.
Yeah.
Okay. So he has to live 7 years. If he were to be a UK resident, if he's not a UK resident, he's outside the scope of inheritance tax as long as that cash is concerned. But if he's gifting you the property, which is UK property, then it's inside the inheritance tax scope.
Okay, I am UK resident. Okay,
I'm talking about him, not you.
No, he want to just send money for me to buy.
Is he UK domicile and resident?
Yeah. No, I am. No, not he.
So he is him who will be subject to tax, not you.
Okay.
Because
So,
he is giving it to you, right?
yeah. So he have to pay the tax.
As long as it's cash.
Yeah.
If it's property, then it's a different ballgame altogether.
Okay. Must be, okay, fine. So he have to pay the tax then.
No, he doesn't.
No tax. Yeah.
Because he is not UK domiciled.
Okay.
Yeah, he lives overseas.
Yeah.
He's outside the scope of inheritance tax because he is not UK domiciled, nor does he have any asset in the UK.
Okay.
So he's not subject to UK inheritance tax.
But I can buy the without.
Then you can do whatever you want to do with it. You can take me out as well.
Oh, without. No, without tax.
Yeah, so it's yours. Yeah, trust me, it's yours.
Thank
But
you.
the moment he then buys the house in his name, he is liable under the inheritance tax.
Yeah, great. You can come and talk next time. Yes.
Okay, we're talking about non-doms. It's right at the top at 10 Downing Street. But the question I have is that if I give some cash assets, which I have, to somebody who is non-dom, is that cash asset still subject to inheritance tax?
So again, who is giving?
I'm giving.
Who are you? Domicile or non-domicile?
I'm UK domicile.
That's it, period. So it's up to you. The tax is on you. So if you have given it,
But I'll be dead.
doesn't matter. As long as you live 7 years, it's fine.
No, but after I'm dead, if I give this money,
After death or before death?
no, before that.
Decide what you want to do.
Yeah.
Before or after? Seriously.
No, I gifted before, obviously.
Yeah, so if you've gifted before, so again, going back to the example, whether this is a property or whether it's a cash, it's all part of my estate. If I want not to pay inheritance tax, I have to make sure this goes out and I live 7 years. Whether it's cash, property, diamonds, anything.
Okay, so it won't work, in other words.
Last question, hopefully. Go on, go on.
Just a quick question. If I was to set up a trust, who can be the trustees?
You decide. So,
Can
trustee,
the people who are going to inherit from me become trustees?
I would recommend no, because it becomes conflict of interest.
Yeah, that's what-
So, of course, so for example, if I were to make him beneficiary, I would not make him trustee. Trustee is the person who's got the rights to administer with the property. So I could not have the rights at the same time beneficiary, no?
Okay.
It defeats the purpose. Otherwise, I may as well give it to him outrightly.
No, no.
The reason I'm not giving it to him outrightly is that I would have somebody else as trustee.
What about if you do the mirror will and give it to your wife, everything you have, there is no tax in it?
Yeah, so you're talking about inheritance tax?
Inheritance tax.
So when one spouse dies and everything goes to second surviving spouse, there are only two exempt beneficiary for the purpose of inheritance tax. Spouse, like it or not, and charity. So as long as you give everything to spouse, or spouse and charity, or spouse or charity, it's exempt on first death, But then after that, even if your spouse were to remarry, there is no exemption applicable. Otherwise, I'll keep on remarrying. You get me? Although we have 4, HMRC doesn't recognize that, so it's only one spouse. So, yes, you have avoided the inheritance tax. You have kind of deferred on first death, but you cannot avoid on second death. So,
Then she can sell it and dispose the cash
yeah, absolutely.
without the tax.
Yeah.
One more question for me. What since we can give a gift of £3,000, and that's there's no like 7 years and all that.
Yeah,
Is that correct?
Yeah, £3,000 is annual exemption. That's a
It's
very
an
petty
exemption
amount.
from
Yeah,
tax.
yeah.
But I can give it to, like I've got 2 grandchildren, each one £3,000 or just one 3,000?
You have £3,000. Your children doesn't have £3,000.
So I can give only one 3,000
You can give £3,000. But you want to give it to one or divide by 10,
okay. Yes,
up
thank
to you.
Thank you.
Yeah, otherwise, imagine you have 1 grandchildren and I have got 10. I get to give £30,000. You can only give 3,000. That's not fair, no? That's what it is. Every year. If somebody is getting married, you can give up to £5,000. So I'm getting married next year for that reason. You can give me £5,000.
If one is divorced but still keeps the ex-wife's name on the house, after the first death, you don't pay the inheritance tax because it still goes to the ex.
It's no longer a spouse. Divorced, you mentioned.
So what is the benefit of then keeping the ex?
I don't know. I'm not the one who advised to ask me for the benefit. So it's divorce, right? So the exemption applies only to the spouse or the charity. It's divorce. It's no longer spouse. It's no longer husband or wife.
Not the named person regardless.
No.
If the house was bought under the Mr. and Mrs. name, doesn't it count as...
What matters is what it is now. So now she is not your wife. If she is not your wife, the spousal exemption would not apply. Finished. You may want to remarry.
Take an appointment, please. Take the 3 boxes.
I still take questions up to 12:30. Yeah, after 12:30 we'll stop.
I
So,
think it's okay for now.
Yeah?
Just last question.
Somebody wants to ask questions there?
You're most welcome. What I would start off with, I would perhaps have in a 6 months' time one more presentation purely on the will, and hopefully by end of that particular presentation, what least we should all do is have a will in place. It doesn't cost earth to draft a will, but we all should have a will. It's stipulated in the Quran that it applies to everybody, and that applies to me and everyone for that matter. Life doesn't come with any guarantee. We have all seen in the COVID. And the least that we should have is the will in place. And by having the will in place, you kind of do a bit of inheritance tax planning by default within the will anyway. Such as, for example, giving everything to spouse. Yeah? Ji.
Assalamu alaikum. Yeah, the same thing that you touched now, I wanted to suggest you, when are you going to give us a preferential treatment in the your fees, so that all can have one. So then you don't have to come again and again to give us this lecture.
No, we'll go for a presentation. We'll go for a separate session on the will only, and like I've mentioned, but hopefully by end of the particular presentation, all of us should have a will.
Yeah, exactly.
And we can go for a simple static.
Exactly.
You don't have to go for any complexity in the matter. And within that particular session, we would also have a clause, as advised by President. No, I'm just kidding. To have something given to charity as well. And I would definitely encourage all of us to have something for Jamaat as a percentage. But yeah.
Because World Federation do have something online, whether you will also guide us accordingly.
Yeah, definitely. So we would go through with simple tick boxes again for the will drafting. Okay, how much you have, whom do you want to give, and whether you want to give it to charity or not. Make it very simple. Everybody can use that template, and hopefully by the end of that particular presentation, as I've mentioned, we should have filled up templates from all of you who would like to have the will drafted, and inshallah we should be able to get majority of the will done, hopefully.
Thank you. Now the question I wanted to ask you, when for example, if the spouse passes away, the other, all is transferred to for husband or wife. But then husband or wife can give that part of the other husband or wife
Yes.
to the children, so that it becomes out of the tax section under the million rate.
Yeah, so again, say for example, somebody's got 1.5 million. That's why you're giving everything to wife. Otherwise, up to 1 million, you're fine. You got 1.5, you're giving it to your spouse. And now spouse died as well. The thing is, if you're giving everything to spouse, well, hopefully there's full trust within inter-spouse, but most of the time people do get scared of the fact that if I were to die, and if my spouse were to remarry, then there's a full control to that particular spouse to do whatever they want to. And then if the person were to remarry, then the estate would be distributed to the new incoming spouse. So for that we have, again, IIP trust on death, whereby everything goes to surviving spouse, but the beneficiary would remain, the capital beneficiary would remain the children. So that estate doesn't go to the new incoming spouse, if that's what your concern is. So around that.
My concern is different, because I think somewhere is mentioned that if you die and you leave to your spouse, say 1 million, and then you leave the instruction that the spouse divide that half of it while she's alive.
Yeah, so what you're saying is letter of wishes. You see, if I were to give it to him, again I'll go back to example, then what he does with this, I can just wish, stating, Anu am karjo. But he's not bound by it. He's not bound by my letter of wishes. So what you're saying is, I were to give it to my spouse, and after my death, spouse should sell the property and give this to that and this to the other. Yes, those are wishes, but it cannot be legally enforceable. Your spouse may decide to do something else, and you won't be there to begin with, and no anybody could enforce on her or him to do that.
That's for the fear of Allah there, hopefully. And
Yeah, inshallah.
said,
I mean, everything here is for the fear of Allah, isn't it?
At this age where we are sitting here, when the spouse will get married.
I'm just giving you scenarios, and I have seen. People were all abiding and, very farma badar, and things have happened. Pachi, I've seen things. So, again, it's all subjective.
The benefit of having a will would be according to our Islamic rules.
Yeah, it's compulsory. Hadith and Quran, banne mache. You should write a will.
But that also may be in conflict with the law of the country.
Yeah, so what we try to do is we strike a balance when we do the Sharia compliant will in the next session, July, August stroke, when I come, is that we strike a balance and we'll give you the options whether you want to go with Sharia compliant, whether you want to go with the tax efficient, or perhaps strike a balance in between, a fine balance between both of them as well. For example, Sharia compliant would say double to son, half to daughter, and so on and so forth. And then if you were to do that, then you would not have the inheritance tax benefit, because you're giving less to spouse. You want to give more to spouse. So you go Islamic way.
Yeah, but then you're going to lose out obviously on the.
So eventually, there's a way, like I've mentioned. I have a session whereby you can strike a balance. You have Islamic, and at the same time you also take the benefit, some benefit, if not all the benefits. Okay.
Just a very quick question, if you don't side.
Yeah.
The question here: when you own your house with your wife, two types of ownership.
Joint tenants and tenants in common. So joint tenants and tenants in common. So I'm going to say, for example, if we were to own a property, which is this one, okay, as a joint tenants, so if we were to own the property, which is that, 50-50. But as a joint tenants means if I were to die, my share automatically goes to him. So he becomes 100%. But if it's tenants in common, and if I die, my share dies with whatever I wish to decide in my will or in testator. So if I say this share goes to you, it will go to you. It will not go to him. Joint tenancy is called the principle of survivorship. So the one who survives automatically gets that. But that normally happens only in the husband-wife or civil partnership cases. It doesn't usually apply for the business partners.
You mentioned about buying a second property in trust. Could you just explain once again, there were some tax advantages of buying a second property in trust?
Yeah, 2 or more properties. I mean, there are many advantages, to be honest. Like I've mentioned, trust to begin with, you give it away, you live 7 years, you're fine, no inheritance tax on it. Any rental income that you earn from that particular property, you could potentially save full income tax on it. It comes guaranteed. So again, like I said, go with the legislation, read through the dividend legislation on the company and dividend legislation on the trust, and you would know what I'm talking about. So unfortunately, trust is an area which not many tax advisors are savvy around. When it comes to company, everybody has a say. But when it comes to trust, there are few. And there's a body called STEP, which I'm a member, which is Society of Trust and Asset Practitioner. So it's a worldwide body. But yeah, in essence, with trust, it's great, it's beneficial. Yeah, more efficient.
Can you throw light on this 7-year thing? Not many people know about this 7.
Yeah. Yeah, so like I said, here, everything you have is here. If you don't want to pay inheritance tax on 40% on this, you give it and live 7 years. Because what HMRC doesn't like is that I've been diagnosed with cancer and I have given everything away and died within 6 months. HMRC says it's not a real gift. It hasn't passed the test of gift because it was never yours. It was always yours. You have given it now that you're going to die in 6 months' time. No.
What about the person that you have given to? Is liable to payment of tax?
Of course.
7 years.
Yeah, but then again, like I said, as long as you live more than 3 years, the tax gets reduced. So it's not that you died on 6 years, 364th day, oh, bad luck, all of this will be taxed now. The more you live, the better the tax savings would be.
Will you put your estate in the name of yourself and your brother? Is it acceptable? The loans, suppose somebody doesn't require it, he leaves it. He and his brother are the joint owners. Is it acceptable?
I didn't get your question.
If you don't have a spouse, would you then be a joint owner with your brother?
You can be joint owner with anybody. Anybody you can be joint owner. It's your choice.
You can make me your
He's learning from me. Thank you.
I think we're finished now. Thank you very much, Arif Bhai. We appreciate. Inshallah, like you said, we will call you again for when you're ready. You let us know, and he's very kind to us. Yeah. One more announcement here. In future, those people who talk at the back will be fined heavily for their talking while the lecture is going on. I'm going to fine everybody £1 each.
I would say the best punishment would be no food for them.
Okay? So it'll be £1 each, a fine for whoever talks when the lecture is going on. And that goes from next week. All right?
Thank you very much. Hassan, thank you.
Thank you very much.
Thank you.
Muhammad wa ali Muhammad salawat. If I can have some silence, and I can start my Surah Yasin, Muhammad wa ali Muhammad salawat.
There is a verse in the Holy Quran which says, وَإِذَا قُرِئَ الْقُرْآنُ فَاسْتَمِعُوا لَهُ وَأَنصِتُوا لَعَلَّكُمْ تُرْحَمُونَ. When the Quran is recited, keep quiet, listen to it, so that raham, mercy, may be shown to you. What is the opposite of it? If you talk, and if you don't listen to and pay attention to, then don't expect mercy from. I'm sorry to say this from Allah. This is a very strong thing. It is in the Holy Quran. So please, for our own sake, for your sake, please, for at least when the Quran is recited, please maintain silence and listen to it, please.
I can have this translated in English and Kiswahili if people understand what Murtaza said.
Inaposomewa Quran, tafadhali nyamazeni kimya na msikilize sawa sawa kwa makini. Asante.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم. Sorry, there is keys are required for this car, a Honda LS67 OCV. LS67 OCV in the ladies' car park. Yeah, and another car which is also a Honda DE54XNU. DE54XNU. Keys are required. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم ياسين والقرآن الحكيم إنك لمن المرسلين على صراط مستقيم تنزيل العزيز الرحيم لتنذر قوما ما أنذر آباؤهم فهم غافلون لقد حق القول على أكثرهم فهم لا يؤمنون إنا جعلنا في أعناقهم أغلالا فهي الأذقان فهم مقمحون وجعلنا من بين أيديهم سدا ومن خلفهم سدا فأغشيناهم فهم لا يبصرون وسواء عليهم أنذرتهم أم لم تنذرهم لا يؤمنون إنما تنذر من اتبع الذكر وخشي الرحمن بالغيب